Hi, everybody. It's Jessica Stone at Stansberry Research, along with Brett Aitken, the publisher of Stansberry Research. And Brett, you've been doing this for more than 25 years. You've been a business owner, you've been an advisor, certainly an investor. What are your thoughts on how to get through a complicated time like we're seeing now with the coronavirus crash?
If you've been around for a while, Jessica, like I have, you've lived through a few of these, and I've lived through three, if not four. In fact, I think this is my fourth. Starting with the Australian recession back in the early 90s, I had a business there. Again, in 99, I had a business when the dot-com bubble burst in the early 2000s. And then, of course, I still have the same business in Barcelona in Spain in the 08, 09 debacle. So yeah, I've lived through a few of these, and this is clearly a different cause. But what I would like to point out is that they're all different causes. The dot-com was something new for us. The housing burst was something new for us. And this, of course, is tragic from a health perspective. And you know, I know we've got challenges ahead of us, but I do feel optimistic that we are making progress. And but at the end of the day, it's the cause that's different. But the crisis, they have similar traits and they form similar patterns that I think we can learn from, which helps us navigate the current one.
So, what are some of the lessons that you've gleaned from your observations from those patterns that could help people get through this one?
Yeah, one of the big things I think I've learned, I've been fortunate enough over these years to work with some brilliant people, some great financial minds and entrepreneurs, and they all have a very similar trait when it comes to dealing with challenges, in particular in crises like these. The first thing is that they know how to control their emotions, and particularly from an investor's viewpoint, there's nothing more important than not acting on emotions. The other thing that I've noticed, everybody is very analytical, and they learn how to navigate the map that we're living with today. Rather than look in the rear vision mirror, they look at what have we got on our pathway ahead of us, and what are the opportunities ahead of us. And importantly, when they get those opportunities, they know how to act. Don't be sort of stuck there thinking what to do and not do anything. And hopefully, if you've, from an investor's viewpoint, if you've planned correctly, you've got the appropriate allocation sizes in the positions in your stocks and bonds and other investments that you have. And if you've had trailing stops in the case of the stock market, you've probably been kicked out of a number of positions and you've probably raised cash. So hopefully you're sitting on a pile of cash and you'll be able to look at ways to deploy that in the current environment.
Do you have any thoughts on when we'll see a bottom?
I don't consider myself to be an expert at predicting bottoms, but I really don't think it matters. And here's why. I think we've had a market drop of somewhere around 25–30% as of today. It went a little bit further last week, but it's bounced back a little bit. So we may see some more pain. We may trade sideways for a while, but with a fall off of stock prices like that, it creates enormous opportunities in the market, not just in the equities market, but also in, you know, we're seeing a lot of high quality businesses that have gone on sale in the last couple of weeks. We're also seeing opportunities in the bond market, and we haven't seen that for a long time. Bonds, of corporate bonds I'm talking, have been overpriced for a long time, and we look for opportunities in that market to buy bonds at a discount. That's been very difficult, but all of a sudden those doors have opened up. I think the gold sector has got enormous opportunities for gold, the bullion itself, but also for the mining stocks. The quality mining companies are going to do very well out of this environment, particularly with the amount of stimulus we've got coming in. And for the traders out there, I think with all the volatility, it's a trader's market. They love the volatility, and if you know how to trade volatility, I have some ideas on that, which we can chat about another day. But I think there's an awful lot of opportunity that has arisen over the last 30 days.
You also talk about high quality companies and finding them at a discount at a time like this.
Think of a company like Hershey's, which is, you know, the renowned chocolate manufacturer. That's an opportunity that I think you can't go too far wrong. And if you're buying high quality stocks, so long as you buy them at the right time, you're almost assured of good, solid, double-digit returns over the long term, because we're not looking to trade in and out of these stocks. We're looking to buy them and hold them forever. So the important point is to buy them at the right time. And when you've had a correction or a bear market, as we're in today, of the 20–30% sell-off, they're probably becoming very attractive. And if you buy them at the right price and just hold them, it doesn't really matter whether you pick the bottom in the market or not, because you can ease your way in. I don't worry too much about picking the bottom in the overall market when I see opportunities like Hershey, American Express, Coca-Cola, these names that have all sold off recently. There's enormous buying opportunities out there.
How do you recommend people sort through all the financial information that's being thrown at them right now in a time when they really need it, because so much is going on in the economy and the markets?
Yeah, it's a great question, Jessica. It's a tough one because there is so much information out there. Any channel you turn on TV, it's reporting on the coronavirus. There's obviously social media sites out there, so it's overwhelming, quite frankly. So, you've got the choice. I look at it, you've got two options. One of them is to look through it all yourself and try and weed through what's right, what's wrong, what's accurate, what's perhaps not quite so accurate, and make your own decisions based on that. The other way, of course, is to find a reliable independent research source, which obviously we hope you'll choose Stansberry Research. But the idea there is that you've got several analysts that are looking at this data every day, analyzing it, aggregating it, putting their own opinion, layering that on top, but taking things and putting some context around it so they can put it into perspective for subscribers and viewers. So I think those are the two options, and I, of course, choose the latter.
Thanks so much for joining us, Brett Aitken, the publisher of Stansberry Research. And if you would like to see more content just like this, please subscribe to our YouTube channel. You can also follow us on Facebook, Instagram, and Twitter. That's all for now. Thanks for joining us.